Good morning and welcome to Opening Bell. I'm Surabhi Upadhyay, and indeed it's a good morning. It's a bright morning for India and the United States. The deal has been finally arrived at. It's not signed, but yes, it has been sealed, and we got the announcements from the top leadership, President Trump and Prime Minister Modi themselves. The announcements started filtering through around 10:30 last night. And then the confirmation came in, and that was a Network 18 exclusive, a confirmation coming in by Sergio Gore, the US ambassador to India, in a conversation with Zaka Jacob. So yes, the deal is done, and the numbers are looking very, very good, because what was a 50% tariff rate has come down to 18%. Yes, you already know the details over there. The additional punitive tariff of 25% that India was slapped with because of the import of Russian oil, that additional 25% has been taken away. So our reciprocal rate comes down to 18%, which puts India at a fairly competitive position compared to a lot of ASEAN nations as well, where tariffs are still ranging between 50 to 20 and in some cases more than 20% as well. There are, of course, the finer details that we still need to get into. For instance, India's exports of metals may not enjoy this 18% rate because they come under a different section, Section 232, and there the rate continues to be 50%. So there are some of those nuances, but the headline is that this is positive. It's a big overhang finally off the market's back, and that's the reason why the GIFT Nifty has been indicating a very, very buoyant start. A gap up opening is expected. It could be anywhere between 3 to 3.5% higher. And then we need to see whether short covering kicks in. The market, remember, has been excessively short, and those shorts will have to run for cover because not too many people were anticipating an announcement as this one, as big as this, overnight. So expect short covering, expect the Nifty to surge ahead. Yesterday itself, there was that inkling, or there was that positive indication. We didn't know quite exactly the reason. But the way the market reversed from the opening lows yesterday, the mid-morning lows, was very, very heartening. Now, add to this the fact that the global backdrop is also very, very positive. So you have obviously this big headline coming in. And remember, it removes the overhang and, restarts the hope of India receiving some FPI flow. So if FPIs are looking at a global allocation, they perhaps at least don't need to, worry about the direction and the shape of the India-US trade and strategic relationship. Quick final points on this before I open it up to our editors and our guests. Some of the additional points that we need to keep in mind. We've got, of course, a lot of earnings as well today. We'll watch out for that. It's going to be a short covering led move. Expect a lot of action on textile stocks, textile exporters, names like Pearl Global, Wellspun Living, Gokul Das. Expect action there. Expect some action on the electronic space as well, because electronics do end up being a large part of our exports to the US as well. Pharmaceuticals space, pharma stocks in particular, those who are supplying those generic medicines, they will be in very, very sharp focus as well. So that's the picture. The global backdrop is very good. Wall Street has actually had a very positive close, 0.5% to 1%. So the Friday roller coaster is behind us, at least for now. There is a pullback in Asian trade in gold and silver prices as well. Crude oil has cooled off because Iran tensions seem to be on the back burner, at least for now. So there's a 4-5% drop in oil prices. It's the perfect morning. You've got global cues, you've got short covering, and this deal, which comes in after the EU FTA, which is likely to turbocharge the bulls. So let's straight away get to our guests, and I have with us Bodhisattva Ganguly joining in for the first thoughts. Bodhi, it's been a sleepless night for, I think, most of us here following the announcements and the action. But, how would you view it given the details we have at the hour?
Yeah, so as you said, Survi, it was a sleepless and rather dramatic night with, I think, Ambassador Sergio Gore first saying that Prime Minister Modi had spoken to President Trump and then saying, stay tuned. So that was the first indication that an announcement was coming. And then, of course, the announcement on Truth Social. So a number of things, Survi, you touched on some of them. So, just to restate, so textiles, leather, gems and jewelry, which were the labor-intensive exports, which were hurt by the 50% tariff, 25 plus 25, right? 25% reciprocal plus 25% penal. Those come down to 18%. So those are the immediate beneficiaries, in terms of, because at 50%, quite frankly, it was becoming unviable for industries such as textiles and footwear and so on. And some of the statements by the textile manufacturers last evening do indicate that 18% will be doable. I mean, it would have been better if we had got 15%, which was the EU rate, or 10%, which is the British rate. But let's see. The other, there was, of course, as you know, no tariffs on electronics and pharma. So those are not affected. But the shadow, or the fear that something could happen to those exports, I think that the uncertainty has gone off. Exports
Yeah.
on auto components, metals, aluminium, and steel primarily, which are the so-called Section 232 exports, those are not affected by the by what has happened last evening, because those were introduced under the national security clause. So those are not changed, but I think again you could expect now issues in those sectors to get resolved, and perhaps tariffs there also to come down to 18%, if that's the standard tariff rate. But that's not going to. The biggest thing I would say, Surbi, is that see, there was always this fear that at some stage, this protectionist sentiment in the US will could spill over to outsourcing, service exports, IT exports, and the services provided by the Global Capability Centers, GCCs. So I think that uncertainty is off the table. Because with President Trump, nothing, things are not always off the table indefinitely. But for now, the fear that, and I am aware of the fact that even, our policymakers here were concerned about the tariff on goods being, services being affected, attempts to restrict outsourcing and all that, and which is extremely important for India's balance of payments. So that, I think, that tension is off the table, and so as you said, we are all set for a perfect storm in a good way, as far as the markets are concerned this morning.
Oh, absolutely, indeed. And like you said, the shadow of this uncertainty goes away from a lot of sectors that, technically.
The biggest shadow of uncertainty, I think, is the outsourcing bit, is services exports.
Yeah, absolutely.
This doesn't necessarily affect H-1B visas in any way, but the fact that outsourcing could be hit, I think that fear has gone away, hopefully for good. But we'll see.
Yeah, absolutely, and that's why this is likely to be a full market event. Because, I mean, if you look at the math and the numbers, Bodhi, then the absolute numbers were, a value of exports, $85 billion, and that number reduces further if you look at the listed universe that gets impacted. And it's 2% of India's GDP. So, absolute numbers maybe were not huge. But, I mean, the partnership was always huge. And the partnership and its fate was hanging in the balance, I suppose, over the last 10 odd months.
You're absolutely right. So the big macro headwind. See, India has done a lot of reforms in the last 3-4 months, starting from the GST rate cuts, then the EU FTA, the Britain FTA. So those are all positive. But you see, the big macro shadow hanging over the market was really the 50% US tariffs. And I think that would, it would be hard to believe that it was not having some impact on FPI inflows into the Indian market. Because a lot of other things were, there were these big announcements, if you remember, late last year, Amazon and Microsoft and so on, and Google, cumulative total about 60 billion into the Indian market. Those are all positive. But this was the big macro headwind hanging over the Indian market.
Oh, absolutely. And I mean, this goes away. The statements have been so positive. We actually have Anubhav joining in now from Moneycontrol Pro. And of course, he looks at a lot of these sectors very, very carefully. I don't know if you managed to get any sleep at all. Anubhav, I mean, give us the first cut analysis reaction. I mean, and I was looking at the stocks, right? And many of them, for instance, Gokuldas Exports, they've been sulking probably close to year lows. So I'm guessing, I mean, we're going to see some big bazooka action in stock prices today.
Yeah, absolutely. Great. I mean, it's a surprise in a way, though there have been a number of signals actually India had been sending. For example, back in November, we did this LNG, LPG deal with the US. And then we had, as per the data coming from Kepler and all, the purchase of oil from Russia had actually substantially gone down. But the kind of geopolitics in which we are also having parallel engagement with number of countries which could have gone, could have added friction actually to our relation with the US. So this headline statement on the trade deal actually comes as a surprise. And I think that if you look at last 1 year, Indian financial assets have actually kind of diverged from the the peers' performance, whether you see at the equities or whether you look at the currency. Nifty actually was flat for last 1 year compared to Hang Seng, which actually had gone up by 10%. Some of the Asian peers like Kospi actually had almost 100% up. At the same time, our currency actually depreciated in a time when actually the dollar index actually depreciated as well in last 1 year. I see that the first reaction would be more convergence of this financial assets to the mainstream performance which we are seeing in the markets. Now, coming to sectors which you mentioned, actually, I think textile is one of the prominent sector which should get benefit. I think in the last few months, this sector has got, all the boxes clicked. We had trade deal with UK, with the European Union, and now with US. I think it's quite a positive thing for textile. And then there are other segments like gems and jewelry, aquaculture. Those are the sector, and the auto ancillaries which are going to benefit from this huge change in tariffs. And the reason being that the kind of countries we are competing with in this sectors, they had quite a huge comparative advantage compared to India when we were having a 50% kind of a tariff.
Yeah, I mean, absolutely. This is pretty historic. The last one in the line, right? We were supposed to be the first one in the line, Anubhav. Ended up being the last one. But I guess many will say that India also stood its ground. The question, right, Anubhav, is that from the market standpoint, do you see this as a one-day event which kind of resets our January underperformance? I mean, India has been probably the worst of the block in this year. So is this basically like a one-day event? Budgets are usually one-day events for the stock market. Or do you think this is going to trigger something longer and kind of start a bit of a virtuous cycle of sentiment and maybe flows as well?
I think both ways actually. I think it's a one-day reset for sure in terms of the kind of underperformance we had in the last 1 year for our financial assets. But at the same time, it's not going to be a steady upturn, because the way geopolitics is, probably there would be many other rounds of negotiations or details which will come around. So, but at the same time, as far as our own balancing act is concerned, probably it resets us to look forward to build up from here actually. So from the trade fund, we have done a number of deals recently, free trade agreements and all. With the US actually getting set, actually it's much more clarity from exports are concerned, as far the exports are concerned. Right.
Yeah, absolutely. Thank you, Anubhav, so much for being with us. And remember, viewers, you can catch a lot of the very specific analysis on the implications of this trade deal, what it means for exporters, individual sectors, individual stocks on Moneycontrol Pro. So make sure to catch the rest of Anubhav's analysis and the entire MC Pro team on MC Pro. I know you have a busy day ahead, Anubhav, so I'll let you go. Thank you so much for joining us early morning. Thanks, I think we've got Bodhi with us. If we can go back. Yeah, I think Bodhi, final words before we get into the market action full throttle.
Yeah. So very quickly, just to close. I agree with everything which Anubhav said. I think it removes a headwind. There are lots of details which need to be sorted out. For example, if you look at the Truth Social statement, it talks about India stopping crude imports from Russia. Now, that's not there in the Indian readouts, but the issue, it is India's crude imports of Russia have been coming down very substantially in the last 1 year, and they're much less than the compared, but it's not zero. Then there is the purchases of 500 billion of US goods over a period of time, which I suppose would have lots of defense and LNG, but that's a large number. So we'd have to see, get into the details and the internals of that and, figure out what exactly that means and over what period of time, 500 billion is to be brought. So lots of details, but overall, I think it's also fairly clear from President Trump's deals that it's the headline number that often matters and the details can still be negotiated later. I mean, that's happening with the EU, that's happening with South Korea, and so on. So it's a process, but it just gets this, this 50%, this 50% monkey off our backs, to put it, so it removes a major uncertainty for the Indian markets and for the Indian economy. It removes a major macro headwind. So so that's really about it. So it's positive.
Well, for now, it's going to be a thunderous Tuesday or a terrific Tuesday. We'll find out. I think it's going to be a bit of both. Thank you so much for taking our early morning call, Bodhi. And I know it's going to be a busy news session, so we'll connect again soon. Thank you for joining in. All right, it's about 8:45, and some of the pre-open rates will come in about 15 minutes. Like I've been saying, the GIFT Nifty has been extremely buoyant. When we're talking about a 800 to 1,000 point uplift on the GIFT Nifty, that's the kind of indicative start we have. Mayuresh Joshi of William O'Neill is joining in. Mayuresh, good morning. I thought we'll be talking defense stocks, budget takeaways, all that, but the market moves so fast. You got a huge, bold new headline coming through. So now you tell us, exporters, Gokul Das, Wellspun, where are we going to see the biggest stuff manifest? And then also, what should be the approach? Either there'll be people who will try and take a very quick trade on this next 2-3 days, and try and make hay while the sun shines. But here the sunshine is going to last long. This is a long-term overhang out of the way, right?
Morning, Surabhi. I think a couple of days back with the SCT announcement, we were all bracing for a manic Monday. And in fact, it's going to be a thunderous Tuesday, as you said, right? So I think a major overhang for the markets in terms of the India-US trade deal from a macro perspective is largely settled now. If you hear the export or the Commerce Secretary, the timelines in terms of the EU FTA as well, that should largely also take place during this calendar year as well. And a few more FTAs on the way as well. So from a construct perspective, I think exporters, which had largely been beaten down primarily because of the US trade deal news, are going to show a huge bounce back. So whether you talk about textiles, whether you talk about shrimp feed makers, whether you're talking about jewelers to a certain extent, when you're talking about machinery, pharmaceuticals, I think these are the pockets where the maximum pain got inflicted because of the spate of news that probably came through. And therefore, I think the bounce back on these sectors, specifically textiles, specifically shrimp makers, specifically machinery players, might be huge. But as you said, I think everything will probably move up in these markets. Looking at the budget, the kind of capex announcements that have been done, domestic capex manufacturers, capex teams, data centers might also continue doing well as a combination of both these factors. And let's not forget ITES. The clause that has probably come through, it shall probably aid them as well in terms of more clarity in terms of international deals. And therefore, it's a win-win. It is going to be structural because earnings will now start showing some element of respite as we've seen. And therefore, I think once the market reaction for this trade deal is largely done over the next day or two, we revert back to earnings and macro, which is anyway looking in great shape compared to other emerging economies as we speak. So I think great news, and a lot of portfolios will shine and a lot of investors will probably have a smile on their face.
Okay, stocks, Mayuresh, what are the trade deal stocks that you'll buy? I mean, everything is going to pop today, but the question is what to buy.
So I think the obvious players, Surabhi, are going to be these textile players, right? So you're talking about Vardhaman as an example, Gokul Das. But Indocount might have a better say. And why I'm saying this, because Indocount has already done a couple of acquisitions in the US. They're probably starting a greenfield manufacturing in the US as well. They've expanded their pillow capacities for the US market itself. And therefore, I think textile players, whether it's Vardhaman or Indocount Industries, which have got beaten down quite significantly, but actually continue doing well. Shrimp makers are all the obvious beneficiaries. Obviously, I think a little bit of an advantage that came to them was the Australian FTA, where Australia started importing shrimp, which they were not doing so far. We are the biggest exporters as far as shrimps are concerned to the US, and therefore I think Apex, what you're displaying on your screen, might do well, and that might continue doing well going forward as well. When it comes probably to export manufacturers as far as machinery is concerned, I think you probably will get a few of these forging players in focus as well, which had got beaten down as well, whether it's Bharat Forge, RK Forging, to a certain extent. So I think these themes might remain in focus throughout the day as we speak.
Okay, all right. So you've got some names, like you said, on the textile side, Vardhaman, Indocount, and the other name that you just took, Mayuresh, I missed that.
It's Apex from the shrimp makers, Survi.
Okay, Apex Frozen. Yes, let's not forget the shrimp feed exporters as well, and they've also had a very, very difficult last 1 year, and all of these stocks are going to be in focus, absolutely. Okay, Mayuresh, stay on. We'll come to you in just a bit for some more questions. I think we have a technical expert now joining in. Vaishali Parekh is with us. Vaishali, hi. So much can change in the market, right? In a matter of hours. I mean, we were talking about all levels getting broken on Sunday, on budget day, and look where we are today. So make sense of this expected gap up, and then how do you approach trade today?
Very good morning, all of you. Yes, it is indeed a very good morning. And yes, all this while we were very conservative. So 25, we were waiting for 25,200. That was the resistance. But today, of course, we are going to move past all these levels. And this will bring us clarity now, especially for mid-cap stocks, because all this while we have been focusing more on frontline stocks and trying to give trading strategies on that. But now, of course, it gives clarity on mid-cap because now, as Mayuresh also just said, textiles sector is the flavor now, because we see stocks like Gokaldas, etc. They are totally beaten down. So fair value for all these stocks. Besides that, I think even auto ancillaries, if one may look at Samvardhan Motherson, even Bharat Forge, as far as the cash counter mid-cap stocks, Apar Industries, these are the stocks, capital goods. I think overall, of course, it's going to be a participation from all these sectors, but value buying comes in textile stocks, etc.
Okay, so give us specific names, and we can bucket it.
So,
I mean, stocks worthy of a quick short trade versus stocks worthy of being actually added, even from a a medium-term perspective or an investment perspective, not just trade.
Definitely.
Yeah.
So definitely, I will talk about Gokaldas Exports, totally beaten down. Himmat Singh Sede, that is another stock. Welspun Corp is Welspun Living is another stock which I would look at. These are the stocks which look very, very good for a quick trade as well. In the front line, I would also look at stocks like Dixon and KEI, Keynes India. So Keynes Industry, these are the stocks, value buying, fairly priced. Motherson Sumi, Samvardhan Motherson, and SRF is another stock which is good for a quick trade.
Okay, I'm just recapping names. So stocks that Vaishali has picked out on the textiles fronts would be Gokuldas, Himmat Singh, Welspun, Mother Sumi, Dixon. I missed the last one. You gave one more name, Vaishali.
Keynes, Forge, and also Tata Motors. Tata Motors passenger vehicle.
Okay. Bharat Forge and Tata Motors. So the entire lot basically, I mean, most of these companies have US exposure and they could be good, quick trades. That is, Vaishali's view. Vaishali, on the index, what's the Nifty trade? Nifty, Bank Nifty. What's the bigger trade?
Well, happy for those who have bought it the previous day, but I mean, after such a big gap up, I won't recommend a buy strategy, of course. But continue holding with the trailing stop loss. 26,200 would be the next level to look at. And beyond that, if market sustains and the buoyancy continues, we would be heading for 26,700 and so on. So now the scenario is buy at every dip.
Okay, yeah, fair enough. I mean, it's impossible to buy after such a big gap. You buy in the next dip. That's your advice. Got it. Okay, Mayuresh, on the auto space, and Vaishali just picked out some stocks there as well. Very true. A lot of these, companies also have US businesses. They might not have been fully impacted, but there was always an overhang. What's your view on Bharat Forge and Tata Motors specifically?
No, so as I said, Surabhi, I think the CV cycle in the US is showing some signs of stability as we speak. And therefore, from Bharat Forge perspective, I think Class 8 trucks have now largely got diversified, which was a major component in terms of both revenue and EBIT contribution. Therefore, some respite on the tariff front as far as autos are concerned. And let's not forget the US FTA trade deal as well. I think that is going to probably also impact it positively as we speak. And therefore, I think there should be far more consistency in terms of the materiality and the sensitivity in terms of reported earnings going forward. So Bharat Forge, RK Forge, which are also largely now within the forging itself, getting a large part more from machining, which is a better margin business as we speak, and expanding their machining capacities. I think that might add to the value-added products as we speak. So absolutely, I think Bharat Forge should respond very, very positively.
Okay, so Bharat Forge is one more pick. 5 minutes to go before the first of the pre-open rates start coming through. Mayuresh, otherwise on the market overall, I mean, yesterday's pullback was very, very interesting. Of course, global markets also kind of pulled back, so there was some stability over there. How are you approaching things? And actually, let me ask you about these defense names, because there's been so much of volatility, particularly names like Bharat Dynamics, where there was a bit of a result disappointment as well. What are you buying? What are you avoiding? What's the advice there?
So so two perspectives, Sylvie. I think from a valuation perspective, these names are expensive. There is no two ways about it. From a structural perspective over the next 4 to 5 years, is there earnings visibility? Yes, they have strong order books, and the book-to-bill ratio expands more than 5 to 7 years for most cases within the spaces. And therefore, I think revenue visibility is a given. Is there margins? Are the margins sustainable going forward? I think all the orders or contracts that these companies have won are with reasonable margins, and there are specific timelines for a large part of the recent order book. And therefore, I think both margins as well as working capital should probably remain in check. Third, I think in respect of earnings delivery, you're obviously going to see a quarter or two in terms of a spread out 5 or 8 quarters, where earnings might just lag analyst estimates for any reason whatsoever. I think maybe receivable days for elections getting extended, or because of monsoons, manufacturing facilities probably not working to full capacities. And therefore, I think if one probably takes a structural view, I think the defense spend will continue as we are speaking. The expectations in terms of earnings delivery will continue for these three factors based together. And therefore, from a valuation perspective, even if they're expensive, from a portfolio perspective, they might probably give you returns anywhere from 10 to 15% on a compounded basis over the next 3 to 4 years. So HAL, GRSE, Mazgaon, BEL might actually continue to do that.
Okay, all right. Actually, let me run viewers through some of the stats that are playing on the screen right now as well. Just some basics around the trade deal. So, and these are the latest available data points from the Commerce Ministry. If you look at the value of our total exports to the US, this is as of end of 2025, that value is about 85 billion. The value of what we import from the US is about 45 billion. So we're running a very nice tidy trade surplus with the US. Interestingly, despite the punitive tariffs, the growth, year-to-date growth up till November in India's exports to the US is actually very, very interesting, 15%. So somehow or the other, importers have managed to pass on the tariff burden or share the tariff burden. And it's not as if imports have completely crashed or slumped. So that's the other interesting, part. And if we talk about our major export lines, then I'm just reading out some of the main ones: electrical machinery and equipment, of course, pharmaceutical products, as we know, parts of nuclear reactors, I mean, things like boilers, machinery, mechanical equipment, mechanical appliances, of course, pearls, semi-precious jewelry, gems and jewelry, and overall even, imitation jewelry exports. So that's a pretty big category towards the US from India. Mineral fuels, mineral oils, iron and steel. Now, on iron and steel, remember, there is no relief as yet because they are covered by a separate act. And under that act, the tariff remains 50%. And then, of course, finally, apparel and textiles, which is a large category as well. So these are some of the stats to keep in mind. By the way, as we get to the pre-open, let me quickly remind viewers about some of the other aspects of trade as well. Of course, this is the biggest talking point, but we must remember that there are lots of results today and lots of stocks that will react to earnings as well. So let's put that up. Today's result list includes big names like Bajaj Finance, Adani Enterprises. Then you have a whole bunch of mid caps like Kansai Nerolac, JK Lakshmi, First Source. So it's a pretty busy day otherwise as well. Lots of earnings flowing through. Pidilite, Restaurant Brands Asia, Triveni Turbine, Aarti Drugs. Those are the names coming up on your screen. So it's a pretty hectic day for earnings. And very quickly, there are plenty of stocks that will be reacting to numbers today as well. So that list, I'm just rattling the names at least, so we'll keep that on the radar. These are the ones that we'll be watching out for. So there is UPL, PB Fintech, Thermax, and in a couple of cases, PB Fintech's numbers are looking good, pretty strong. Thermax, the profit is up about 80%. You've got Chalet Hotels, which has delivered a pretty steady quarter. There's PG Electroplast. PG's seen a very good, strong year-on-year performance. So let's see if the market likes that. And obviously the overhang goes away. PG is also looking at some level of exports. Electra Green Tech, plenty of stocks. Zen Technologies, plenty of stocks in the news, largely on the back of earnings. There's Honeywell Automation, there's Railtel, plenty of names that are going to be on the radar, the earnings radar. Okay, it's 9 a.m. We have a 790 point bump up on the Nifty in the pre-open. That is what is playing out, at least as of now. That's the first trade, 800 points up on the Nifty. That's what the pre-open is indicating. And stocks are flying. Adani Enterprises 10%, Ports, Dr. Reddy's, Titan, Sun Pharma. It's the entire lot. The entire set of stocks in the pre-open is up and about. State Bank of India, everything and anything, right? Axis Bank, State Bank of India, Mahindra and Mahindra, Tata Motors, you name it, all of these stocks are absolutely flying around. Let's see what the exporters are doing. Some of the names like Welspun Living 20%, Avanti Feeds 20%. Some of the chemical exporters as well, pharma and chemical intermediaries. All of them are up and about. Rice exporters, KRBL, though for KRBL, Middle East is the bigger market. But in any case, Kitex, Garments, all kinds of names on the screen today. It's absolutely a bazooka opening. The Nifty in the pre-open is now 1400 to 1500 points higher. Absolutely astounding stuff. Mayuresh, what's the advice? 1500 points. I don't know this is how it plays out, but what's the advice with this kind of an open?
No, so I think you have to go for quality stocks would be at the end of the day. You have to keep a medium-term view for the markets. Indian markets, as I said, as a base case scenario, with this overhang going off, with more trade deals coming our way, the exporters are now going to be largely having a stable run FY27 onwards. The internals for the Indian economy with stable macros, liquidity, what has been outlaid in the budget in terms of capex spends as well, fiscal consolidation, RBI providing liquidity, is going to provide a base case scenario for a 12 to 14% earnings growth. And therefore, when you map India against other emerging economies and the developed markets as well, both from a macro and a micro perspective, I think Indian market should start responding very well as far as earnings is concerned. And therefore, the premium tax should start coming back. So stay invested in quality stocks. I think India is the market to be over the next 1 to 2 years. We have underperformed for the last 1.5 years, but the performance will start coming back. And ultimately, FIs, FPIs, FDIs have no choice but to come back to India as we speak.
Okay. All right, Mayuresh, so we'll let you go on that note. Thank you so much for being with us on what is truly a historic morning. And thank you for advising all our viewers on what they should be doing. Vaishali, quick word with you as well. Everything is up and about right now. On the large cap screen, and it's 9:03. It's still early in the pre-open session, but everything is flying. Reddy is 9%. Eternal, which has nothing to do with the US, but the sentiment is so bullish, right? So now looking at this kind of an open, what would be the top trades? And once again, let's revisit Nifty levels as well. This is a big reset moment for the market, right? So we're going to jump back and completely push, slice through what were previously resistance levels?
So, so purely on technical terms, I think now the hurdle is at spot basis 26,200. Once we see a clarity of our Nifty moving above that, it hits 26,800 and so on. So that would be the level to watch for. For now, 26,200 would be the level to watch. And of course, stocks that, as I'm mentioning, I do like Samarth and Motherson. That is technically very well placed in spite of all the choppiness. Logically speaking, this was holding on its fort very well, and yesterday's bullish candle gives us an attractive opportunity to buy. The other stocks, as I mentioned, Keynes, KEI Industry, Dixon, these are the stocks which are fairly priced. So I would look for technical parameters in spite of all the favorable news to get into a trade.
Okay. And for the Nifty, at what kind of a dip would an entry be advisable? Nifty or even Bank Nifty if you have a trade?
So I'm assuming that yes, we are also going to witness a 1,000-point up right now. So the midpoint, I think 25,600, 25,800, that would be an ideal level to get into the trade. And as far as Bank Nifty is concerned, well, I won't be surprised this going towards 60,500. But I would say, well, 59,500 would be the medium support level to get into the trade.
Okay, all right, got that. Vaishali, thank you very much for taking us through what's been a really, really important morning. Thanks for joining in and advising our viewers on what they should be doing. Thank you very much. Okay, on that note, let's turn our eye back to the screen, and I'm looking at a lot of these stocks which are really, really charged up right now. Gokuldas Exports 20%, Avanti Feeds 20%, Apex Frozen Foods, all the shrimp exporters, 20% on all of these stocks. Other textile exporters, Wellspun Living 20%. I mean, there's no point actually talking about it because stocks are up, limit up in most cases. They're hitting their, up circuits. Let's see what the Nifty is doing. Can we get the Nifty rates up? The Nifty is up 1,300 points. What a morning. But let's not lose sight of the currency. The currency anyway was pulling back in a big way yesterday. And we'll just put the latest rupee rate up as well and expect a big move on the Nifty as well, on the currency as well. That's the Nifty, which is showing a move of almost 1,400 points in the pre-open session. We have Lakshmi Iyer joining in, and she's someone who's tracked, of course she tracks all asset classes, but she's tracked the currency and bond markets for a very, very long time, for many decades. Lakshmi, really, I thought I'll talk to you about the budget and this rise in yields and all of that. We have to park that aside. We've got the mother of all headlines, right? Waiting for this for what, 10 months now? First thoughts?
Absolutely, you're bang on, Surbhi. I think this was touted to be the deal of 2025. And at the end of 2025, we were among the few countries where we did not have a resolution. But I would say there I durust aaye, and this is typical of Raj and Simran. I'm sure all of us have seen DDLJ, Dilwale Dulhaniya Le Jayenge, that where Raj tells Simran, at the train platform, that agar ye ladki tujhse pyar karti hai to zarur palat ke dekhegi. And then that palat has actually happened in 2026.
Lakshmi, no one can do this better than you. No one can put it better than you. My God, I don't think there's any other movie dialogue that could be more apt. Please, ek baar aur, one more time for our viewers.
Palat. I think that is what has happened today.
And indeed, Donald Trump did palat, and he realized that he can't do without India.
Absolutely correct, bang on. So I think it's a good start to the month, I would say, and love is in the air. So as I said, we are celebrating Valentine's Day in the markets even before Feb 14th, and it's good for all asset classes, I would say. So yeah, I mean it's a good sign, and definitely much needed amid all this din that was around. We definitely needed this lightener for the markets for sure.
Yeah, I mean, a 1,200 point gain. I don't have memory enough to remember the last time I saw 1,000-point plus gain on the Nifty. We're not talking about the Sensex, we're talking about the Nifty. What a historic session we are in for. That's the Nifty. Now, what about the currency? I mean, 90.50 on the screen. And I mean, everybody was talking about whether that rush to 92 was getting a bit excessive or not. And yesterday there was some chatter about central bank intervention in the market. But, how do we start understanding what's going on in the currency space, Lakshmi?
I think that's again good news, Surbi. If you, as you rightly alluded to yesterday, there was some central banker intervention or activity happening in the currency market, and today we have the deal announcement. Clearly goes a long way to bolster the positive sentiments, which was otherwise, sagging a little bit. Also, if you see on a 40 currency basket basis, on an REER basis, incrementally the rupee was looking to be undervalued. Forget under or overvaluation. I would say even if it stabilizes at the current levels and a combination of all the RBI activities, including the bond, including the swaps, currency swaps, I think all of that probably would help gaining more and more confidence. FPIs have been net buyers not only in 2025 in fixed income, but even in the January month which just went by. So hopefully that rub-off effect should percolate into Indian equities as well. And I think that would be a solid anchor for the rupee even at the current levels.
Okay, all right, Lakshmi, stay on. Women power today. We've got Radhika Gupta also joining in. Can we pull up Radhika? Radhika, good morning. Thank you so much for taking this, unscheduled stop. But it's historic. I was just telling Lakshmi, I don't remember in my memory in 20 years if I've seen 1,000-point gap up opening on the Nifty. But that's what we're in for. We're 5 minutes away. Your thoughts?
Firstly, I think I envy your job in the media these days. What a few days you've had between the drama we saw on Sunday and the budget, and then a complete turnaround, today. Today I really want to be you, Surbi, but no, I
don't forget the silver crash, Radhika. Friday evening, we got Kevin Walsh. Silver was crashing. We were pulling our hair apart, wondering, how do we look at our programming? And then the budget, a working weekend, and then this. Oh gosh! Actually, we can do with a little bit of a break now. I can speak for all media, I think, in general. But go on.
But I mean, if it has to end this way, I don't know if this is the end, but this is a good one. No, I think this is fantastic. I think it's been a tough 15-16 month for equity investors, and the lack of announcement on this trade deal, it's been something that's weighed down on the market. And now you have 2 consecutive trade deals that have happened. You've got EU. And then you've got US. And as I see it, I mean, as our team sees it, this has come in marginally better than consensus expectations at 18% tariff. So, given a stable budget on the fiscal side, I think this is now one of the most important events that you needed. And this probably will give way for that positive boost that the market needed. Also, I think you'll start to see some rally and excitement in mid and small caps, which have been a sort pain for the last year and a half. So, and I haven't seen 1,000 points up on the Nifty in a while either.
On that, and I want both the ladies to weigh in on this, and I'm now talking about the retail investor, because yes, we know textbook style events and big market moves shouldn't impact our investing, and it should be goal based. We've spoken about that on our personal finance shows for so long. But Radhika, people have moved with the markets, right? Multi-asset funds started doing really well. Suddenly everybody wanted to be in gold and silver ETFs. Now, this morning, everybody will get equity FOMO. They'll suddenly realize that they probably need to, quickly, go all in equity. So, at a time when markets have been on such a turbulent roller coaster, what would you like to tell investors out there? And these are mutual fund investors who at times try and become, intraday or stock investors as well with their funds.
Oh, so I love to see the transaction report in AMC, and I've seen people switching out in the month of January from small caps and mid caps to pure silver. And I don't think there's a problem in holding either gold or there's a problem in holding mid caps. The problem is that you shouldn't forget asset allocation and you shouldn't take actions out of FOMO, positive or negative. I tweeted this last night and I really believe that. I think the problem would be that the last month has seen such wild swings across asset classes, and then investors, we feel compelled to react to those swings, whether it's an up movement in bond yields, whether it's a 30% movement in silver. So I think my push to investors is to take less action, because honestly, one could neither forecast STT on Sunday, nor could one forecast that, two national leaders would put out a trade deal on a Monday night after the budget. So neither is forecastable, and equity returns are also lumpy. So if markets are up 15-20% a year, it doesn't come on every day. You miss a couple of big days, and that is also very, very significant. So I think timing is a very, very hard thing to do. We don't hold cash in our equity funds for this reason, because we know trying to time this is so difficult.
Absolutely. Okay, we're just about a minute away. Lakshmi, quickly on the currency. I mean, there's a 1% move already. What should we expect? And just a word on these bond yields. I mean, they were still reeling under the onslaught of what some called would be higher borrowing this year. But now, how does this event impact the bond market?
See, Surbi, a dead cat bounce was required more for the bond markets than the equity markets. Of course, both markets are up today. Bond yields are down about 5 basis points in market opening. The OMOs, the supply through bonds are getting kind of compensated by OMOs. So that's a good sign as well. So yes, lage raho, and I think keep the faith on. I think that's the mantra for both the bond markets and the currency markets as well.
Okay. So that's what we're seeing. Okay, just allow me 1 or 2 minutes, because we've got that opening and we have what some will call the mother of all openings in many, many years. 800 points up on the Nifty, and that's the first rate was that 1100 points. Now it's kind of settled. It's about a 800 point up move, 750 right now. The mid cap index is surging 4% up. The Nifty is up 3%. The mid cap index is up 4%. The bank Nifty is up 3%. It's a bazooka start. And I want to look at, of course, the trade related names first before we talk about the Nifty stocks. So let's get the textile exporters, the shrimp feed exporters. Let's get all of them fired up. Avanti Feeds 20%, Wellspun Living 19%. Gokuldas Export 20% limit, upper circuit on most of these stocks that we're talking about. The Sirma, which is up 6%, Dixon, Keynes, the electronics manufacturers, all of them up as well. And like I said, Gokuldas, you of course have Wellspun Living, Pearl Global will come up for you on the screen as well. It's such a big morning. Trident from the textile space, just a long list of gainers. Arvind is up about 14-15%. Pearl Global, like I said, is 20% limit up. That's Wellspun Corp. We should pull up Wellspun Living. In tandem anyway, the whole market is so buoyant that all stocks are up, but Wellspun Living is the stock which is a large textile exporter from India. So it's a massive day. Stocks are really flying, going through the roof. Now let me look at the large cap screen as well. Adani Enterprises 10%, Adani Ports 10%. Eternal is having a great session, 6% higher. Bajaj Finance, which will be reporting numbers today, is up about 6% as well. Jio Financial, Shriram Financial, I mean, everything, Reliance 4%, Infosys 4%. IT is very strong as well. Like we were discussing earlier with our Moneycontrol editors, that, on IT, there was always this fear lurking, this overhang lurking about what next. They anyway had a business issue, a low growth issue, and then you never knew which way this India-US dialogue and relationship is heading, and if services could be targeted. So that entire overhang goes. So it's a great morning for IT stocks as well. Actually, nothing is negative. Maybe just one stock. ONGC is the only stock that's down, because remember, crude oil prices, after rallying to 71, Brent at 71, they've also cooled off 4-5%. So that's the added tailwind that we have. Only stock on the losing side. You look at that empty screen, because ONGC is the only one Nifty stock that is down this morning. Otherwise, it's a green looking screen, and stocks are going through the roof really. Radhika, so just a word of advice on this in terms of people will wonder sectoral themes from here on, and whether the budget indeed was good for capex or bad for capex or defense, because till Sunday and Monday morning that was the talking point. Should we be getting out of defense stocks? But the whole market has turned on its head today. So just for people who are thinking sectors, who are thinking beyond diversified funds, what would your advice be?
I mean, so our view on sectors has been this, and this is in advance of the trade deal. But one, we think IT has been coming out of the woods. IT has been an underperformer. In fact, we had launched an IT fund about a year and a half ago. And while there have been challenges of AI and threats of the trade deal, I think Indian IT was really coming out of its worst of times. So, and with the trade deal, of course, IT stands to be a beneficiary. So IT was one. The other one, which has been a laggard, in fact, we're in the middle of a financial services NFO, has been the whole financials pack. If you look at financials, capital market stocks have done well, with the exception of Sunday, but banks and lenders have been, in general, a bit of a laggard. We think with credit growth coming back into the economy, earnings improving, and of course, a trade deal doesn't hurt. Financials could be another place where we have overweights. Actually, if you ask me from a budget point of view, capex was just about fine. Capital expenditure at 12 lakh plus crores, higher growth than last year's numbers. Now it's 9% growth. Some could argue 10% growth, and material increase in defense spending. So I'm not sure what the chaos over the weekend was. Maybe defense didn't get the airtime in the budget that it's been getting for a while. But I think the energy around manufacturing and defense may change, particularly given the announcement last night.
Lakshmi, from the asset allocation perspective, I mean, the question that I was asking Radhika earlier, because markets have been on this roller coaster, correlations have broken down. You have precious metals moving like, micro cap stocks. You have currencies moving like mid cap stocks. So in this kind of absolute, crazy scenario, what is the asset allocation advice?
So I'd say, Surabhi, the asset allocation advice does not really move with the vagaries of the market. If tail-ended allocation to precious metals, specifically gold in this case, and maybe selectively silver as well, if that continues or that had to be tail-end allocation, there's no reason to disbelieve that, or there's no reason to second guess that. Well, I do agree that asset allocations have got distorted because of these very, very swift swings in the market. And I think that needs a little bit of a rejig. But if you are a growth mindset investor, there's no denying the fact that whether it was at 24,000 on Nifty or at 26,000 on Nifty, you need to have an overwhelming portion of your portfolio in equities, and the reverse if you are maintaining a stabilized portfolio and you want it more for income accrual, then your overweight on fixed income precious metals continue. So I think that is going to be the bigger driving factor for investors in their portfolios, and trying to rejig every time there is a market movement, and getting that FOMO based asset allocation is certainly not recommended.
Okay. All right. We'll leave it on that note, ladies. Thank you very much for being with us and taking us through what has been truly a historic morning, and a morning to remember for sure. Thank you so much and have a great day.
Thanks, Ruby.
Thank you. Okay. With that, let's quickly get back to our stock screen and see what is exactly going on. We have the Nifty that's still holding that 3% gain. I mean, it's nice and steady. Let's check out sectors. I mean, the whole market is up. Wellspun Living, that's the stock. That's the textile exporter, 20% higher. That's the Nifty. Let's see in terms of sectors what really is standing, tall. Everything is up in the market, but in terms of top gainers, capital market stocks have actually bounced back quite nicely as well, not just the export space. Then we have, of course, real estate. We have the chemicals pack. We have the automotive index, which is up. The defense index has bounced up. Everything, I mean, just everything in the market is so buoyant. By the way, the advance decline ratio, number of stocks advancing versus the ones that are declining, 2,500 stocks advancing on the NSE as we speak. Number of declines only 124. What a sweeping day and a big sweeping moment this has been for the market. So it's really gainers all the way. Let me pull out some more names. What do we have? Balakrishna Industries, 15%. There is Aarti Industries on the chemical side, 14-15%. Textile names, like I said, like Trident, Vardhaman Textile. Vardhaman Textile was one of the stock picks of Mayuresh Joshi, who was with us earlier. That stock's up and about as well. The shrimp exporters like Avanti Feeds, Pearl Global, all of these stocks up and about. LG Balakrishna, 10% higher. So a lot of the tire maker stocks are also up because crude oil prices have cooled off. So I mean, for them that's a major raw material headwind out of the way, at least for now. So there's that sentiment rub off as well. Not much actually on the loser side. Let me see in terms of top volumes, which are the stocks that should be called out this morning. And it is the same. I mean, the exporters, Trident, once again is coming up on the screen. You've got Granules. Financials are very strong as well. L&T Finance, Axis Bank, Bank of Maharashtra, Bank of India. A lot of these financial stocks, whether large cap banks or mid cap banks or NBFCs, it's a strong morning for them. Look at Interglobe Aviation flying away over there. Reddy is obviously very strong, 4% higher. So it's settled with the 750 point gain. That's what we have ongoing for the time being. Okay, I think we have A. Bala joining in. Let's see who's our next set of guests. Can we get to know our next set of guests, please? Okay, in the next couple of minutes, we'll have A. Bala joining in. Let's do one thing. Let's just play out those visuals which highlight just the text of the announcements. We should get back to the quotes, or rather the social media posts that were announcing this deal. The first one actually came in from President Trump, and the other one came in from Prime Minister Modi. Just look at these quotes, and also the statement that came in from Sergio Gore, the US ambassador to India. He was speaking exclusively to Network 18, confirming that indeed the deal is done. Check out all of these quotes and announcements. We'll be back in the next couple of minutes. The social media posts, the announcements, the quotes that came in from several people over the course of the last 12 hours. It's been a hectic night. But let's not forget, of course, the other big exclusive. We had, of course, our Network 18 Group Executive Editor-in-Chief Rahul Joshi speaking with the Finance Minister last evening. He sat down with Madam Finance Minister Nirmala Sitharaman and spoke about a whole host of issues, starting first, of course, with the rationale for hiking the securities transaction tax, and of course covered important aspects like, investing sentiment in India right now, the tax holiday that has been given for global companies to set up, or to rather use, Indian data centers, which goes all the way up to 2047. So covered all aspects of the budget. Here are some of the most important takeaways from that very interesting conversation.
Yes, it has gone up, or it is rationalized so that all asset classes can be treated equally.
Right.
And that's the logic and reasoning behind that particular rate change.
Right.
It wasn't done with an intent of earning out of it, but the disparity and the differential couldn't be sustained. So we had to rationalize it. And in fact, after that, we even gave that option to say, you choose which one you want to have.
Right.
I remember standing up during the government amendments time, the finance bill passing time. We brought in that flexibility to the people who felt that they were, shortchanged. So that was rationalization. That wasn't for kicking up the rates.
So you think that the current rates are comfortable and
the stable approach towards tax incidence or keeping tax incidence stable,
yes,
has always guided us. I see some green shoots. I think it is the situation is improving, and I have reasons to believe that private sector investments will only grow. Yes, it has gone up or it is rationalized so that all asset classes can be treated equally.
right,
And that's the logic and reasoning behind that particular rate change.
right,
It wasn't done with an intent of earning out of it, but the disparity and the differential couldn't be sustained. So we had to rationalize it. And in fact, after that, we even gave that option to say, you choose which one you want to have.
right,
I remember standing up during the government amendments time, the finance bill passing time. We brought in that flexibility to the people who felt that they were, shortchanged. So that was rationalization. That wasn't for kicking up the rates.
so you think that the current rates are comfortable and
The stable approach towards tax incidence or keeping tax incidence stable,
yes,
has always guided us. I see some green shoots. I think it is the situation is improving, and I have reasons to believe that private sector investments will only grow. Yes, it has gone up or it is rationalized so that all asset classes can be treated equally.
right,
And that's the logic and reasoning behind that particular rate change.
right,
It wasn't done with an intent of earning out of it, but the disparity and the differential couldn't be sustained. So we had to rationalize it. And in fact, after that, we even gave that option to say, you choose which one you want to have.
right,
I remember standing up during the government amendments time, the finance bill passing time. We brought in that flexibility to the people who felt that they were, shortchanged. So that was rationalization. That wasn't for kicking up the rates.
so you think that the current rates are comfortable and
The stable approach towards tax incidence or keeping tax incidence stable,
yes,
has always guided us. Global companies, if they are Indian in origin, will also have to have their profits and other things understood. Global profits made in India, and most of these global companies who are setting up business in India are already also paying tax. It's not as if they are not being covered by taxation for the earnings that they get from India. So if anyone who fits into this definition, not just this, you've very clearly defined it. So referring to that definition, whoever fits in will get it.
so an Indian company like TCS might fit into
A
that.
global company.
A global company like TCS would fit in.
When government has decided in the cabinet that a certain number of disinvestments will have to happen, it's a duty to honor it.
Yes,
We will never be able to bypass it and say no, unless the decision itself is changed by the cabinet, and no decision has changed till now. Earlier it was, at least a few years ago, it was COVID affected market, economy reviving market, so we had to be cautious about going to the market when it is not so suitable and so on. But I'm very clear that I will be focusing also now on disinvestment, having given quite a few concessions in direct taxation, having been given in GST indirect taxation. My revenue also will have to be looked at from the point of view of what am I going to get out of disinvestment. Yes. So it's not to say that I didn't give the attention earlier, but the earlier attention was circumscribed by the fact that we were facing COVID, or we just came out of it, or the situation in the market is not. And some sectors do well, and therefore you can take them forward faster. Yes. Some others take their own time. But we will be going ahead with.
So this time it's a very decisive mandate to go for.
That's right.
And you're very confident of achieving the number as well.
Okay, all right. Those were the big takeaways from the Finance Minister's interview, and she, of course, spoke on a whole host of issues from taxation to GCCs to data centers. Well, with that, let's get back to the market and see the reaction, that historic reaction that continues to play out. The gains are still about 700 points. Stocks are still flying, and exporters, be it chemicals or pharma, textiles, these stocks, of course, shrimp feed, all of those stocks are going through the roof. We have A. Bala of Aditya Birla Sun Life Mutual Fund joining in, and we also have our colleague Hamsini with us this morning. Thank you very much, Bala and Hamsini, for being with us. Bala, quick opening thoughts on what has turned out to be a huge day. I mean, an absolutely huge day. The question is that, is this just a one-day reset for the market and for stock investors, or is this going to start some sort of a virtuous cycle in terms of foreign inflows coming back to the market?
I think it's the one coinciding with the good budget that was presented by our finance minister a few days back. And this has been one of the hanging sword for quite some time for most of the global market, and especially for India. It got delayed beyond our own imagination. So this having now getting fixed, definitely it will create a new move. I think people will start focusing on business, and earnings of the companies would now become the key area of focus. And my view is it's actually is now setting the new trend for the market to actually go upward. From a FI's point of view, of course, last 2 years they have been a big seller, and of course the uncertainty also came in handy for the FIs to stay underweight on India. They will now start re-looking at India from a fresh perspective. One, post-budget, which of course highly growth-oriented budget. Second is the tariff, which is of course far better than what is being expected. And therefore, FIs will start looking at re-looking at India from a flows point of view. Therefore, I would assume you will see virtuous cycle that could come back.
Okay. All right. Bala, just allow us a couple of minutes. Hamsini, our colleague, is also joining, and I'm sure she's been glued to the screen, looking at not just the equity, but the currency and bond market reaction as well. What a morning, Hamsini. Last I checked, the rupee was up 1%. You're on mute, I think, yeah.
I'm back up. It's at 90.3 as we speak now, Surbhi, and what a day. I mean, nobody expected this sort of a reversal to rupee happening. But as Balasa pointed out, we need to see if this is a one-day sentiment or if this is a carry forward trend, because can rupee meander back to the 88, 87 levels when tariffs started becoming a big issue, which was weighing in on the rupee? I think that will really give us a sense of whether this is a one-day event or whether this is a long-term trend. To that extent, I think like we had Lakshmi say earlier, picture abhi to shuru hua hai, bahut sari baki hai hamare liye dekhne ke liye. Well, let's see how it really unfolds,
Yeah. No, absolutely. I take that point. Hamsini, just a word on bonds as well. I mean, up until the budget, we were all talking about this higher gross borrowing, and yields were hardening because of that. This whole worry about whether the government is just going to borrow too much and put too much paper in the market. But now, I mean, with this event taking shape, just any thoughts over there?
See, I think there is a little bit of peculiarity which is happening in the bond market. Interestingly enough, the transmission of rates has been brisker by banks rather than with the bond market, and which is also explaining why a lot of India Inc. is wanting to, go overseas for raising corporate bonds rather than in India. So we'll also have to see how the forex part of it plays, because right now what's happening is that at a combined level, adjusting for forex hedging, etc., overseas market continues to remain very attractive for a lot of India Inc. players versus the domestic market. Today's move, I don't see that sentiment really reversing yet. The bond market action has been not very, very brisk just yet. The day has just started. We'll have to see how it unfolds. And also, we'll have to sort of see whether this is going to give impetus for bonds to become a little more competitive versus the bank lending rates. We'll have to see how that plays out. Right now, I'm not seeing evidence to show that, bond markets are also getting a leg up with this move. It's a bit muted at the moment, Surbi.
Okay, all right, Hamsini, thank you very much for that quick take on how the currency and the bond markets are reacting to this big announcement. Equities, of course, are, still up and away, 670 points, settling a little bit, but, there's still plenty of excitement. So, Bala, for equity investors who've been suffering and struggling for the better part of the last 12 months, I mean, does this completely now take away all the remaining negatives? We still have, of course, to go through the whole earnings upcycle, but we got the stimulus in any case, GST, tax cuts. How did you, rate and rank the budget? And really, does it take away all the equity woes now?
In fact, when I saw the budget and then put my comment for circulation purpose, I ranked the budget as 10 out of 10. Given the fact that budget is not focusing on 1 year, budget is focusing on multi-number of years to come, and all the provisions that ease of doing business and focusing on 7 key area of focus. These are something which is making more Indian economy more sustainable compared to resilient, and the growth I think will become real as we start progressing. Therefore, so I am quite bullish as far as the budget concerns. As far as the market concerns, definitely, of course, the earnings have to come back, which I think, one, of course, the market should not have much uncertainty. And as it stands today, this tariff announcement definitely brings in some kind of certainty in terms of trades. And second is about inflows coming in from overseas, both from FDI and FII's point of view. And third is the industry which got impacted for the last 1.5 years due to the US exports not coming on board. Other than the service export, now merchandise exports also start picking up. Therefore, it will lead to an increase in forex flows coming in. So the cascading impact of the forex flows coming in, Reserve Bank of India will have enough legroom for them to buy dollars and inject liquidity. Therefore, the current ask from the bond market point of view is the liquidity is something is the most needed for the stability of the bond market. Therefore, I think it will have cascading impact in other markets as well. And ultimately, the cost of capital for companies remains low, and especially at a time where private sector investment are now beginning to pick up. I think this will start reflecting on investment and demand-led growth coming in on an overall basis. Therefore, I would assume from an equity investors' point of view, I will have to start looking at having seen 1.5 to 2 years of a flat market, almost near zero kind of return. You will start seeing actually that trend reversal coming in the 26 and 27. We have to look beyond 26 and 27. But the fact of the matter is, at least you set the ball rolling for you to start looking at focusing more on the business and the outcome rather than focusing on policy initiatives, which could also sometimes hang as a hanging sword. And finally, tomorrow, the 6th of February, monetary policy is also there. I'm sure monetary policy also will address some of the concerns related to the bond yields rising and the liquidity not being sufficient enough for banks to take lending growth and so on and so forth. And that also, I think, will probably give a further booster to the market to stay bullish and positive on the upside.
Okay, got that point, Bala. So, what's the advice? Because with this move, I mean, do you really expect the push to come back into equities And will that interest and will that sustenance come back even in mid cap and small cap stocks?
I think eventually, I think they will see the breadth in the width in the market widening. I think this change in sentiment definitely will continue the flows into the mutual fund. That's one. And second is, so far, during uncertain period, you always go and hedge yourself by investing in this say top 100 companies, the large cap companies. And given the fact that, as I mentioned earlier, the earnings outlook for companies will improve as we start progressing, which essentially means it has to actually percolate down to the mid and small cap companies. Though I don't see it immediately, the segment actually is rising, given the fact that a lot of companies have to still justify their valuation, therefore they have to improve their earnings. Otherwise, the earnings multiples will not be justified. To the extent I will see a small start, but otherwise I will see the breadth and the width in the market widening. So, which is over a period of say next 3-4 years, if you have to take it, and definitely mid and small cap companies could be the large beneficiary, given the fact that budget focusing on deepening the economic growth by focusing on multiple sectors, including MSMEs. And second is these rupee dollar getting stabilized would also benefit most of the companies. And third, of course, US tariff reductions will actually revive the interest on some of the companies. Others are largely dependent from mid and small cap space on the export market. I think it will only help in deepening and strengthening the overall market, so to speak.
On gold and silver, Bala, finally, given the huge amount of volatility and what we've seen in ETFs, people always thought that, okay, you can always invest in gold and silver and, either you do it through a fund or an ETF. This last episode, the last 2-3 weeks have made people realize that ETFs could be a very, very different animal, very different beast, with the kind of premiums in the bullish time and then the crash that we saw in many of these ETF prices. Do you think the worst of that volatility is over or not, or hard to say? What would you advise people who have recently invested in either gold or silver products via index funds or ETFs?
These two should be considered as part of the asset allocation rather than a speculative kind of thing. At the moment you start speculating in the gold and silver asset class, I think the kind of volatility that's coming in would be far higher than the volatility that we have witnessed in, say, F&O market and equity market, given the fact there are no underlying earnings and the demand supply is completely unknown, and how much of the activity is due to the speculative without either having money or without having any delivery. And these are very well unknown. And ETF money is coming in, and definitely, of course, people do trade when too much of money is coming in and the limited supply is there. Then naturally one has to buy the security at whatever the price that you are getting it, therefore you are seeing the volatility coming in. But from the investor's point of view, we must remember, I think metal as a sector is not something easy to understand, and also it's a metal, it's a globally everybody wants it, and we do not know from which part of the world the risk will come. As we have seen in the last few days, there are few risks which is coming from China, there are few risks coming from Indonesia, especially in the metal sectors, and these are some of the risks which we never be able to estimate, and basis which we can take our investment decisions. So therefore, the best to play on this investment through the multi-asset allocation fund, which invests in, of course, in gold and silver up to 15 or 20%. The better to do it that way rather than getting caught on a speculative element. Otherwise, somebody wants to build this as asset allocations, then better to build gradually rather than getting carried away by the market momentum, and then you get in at the high price, then you start looking at the exit at the same price, which probably may not come. These are some of the dynamics I think we'll have to keep in mind. As the economy starts improving, with the tariff coming in, definitely the global uncertainty on economic growth will come back. So when the economy starts performing better, then naturally these metals would start underperforming once the market start performing better than these metals.
Okay, all right, Bala, we'll leave it on that note. Thank you very much for joining in. Good to get that perspective from you on a very important day, a very important morning. Thanks for being with us.
Thank you.
Okay. Well, before we move on to our next guest, I'm just quickly doing a check on the market. 2.5% up, 600 points up on the NIFTY. That's where things have more or less stabilized. The Adani group of stocks, by the way, are still very, very active, and they're still looking at big gains, 7 to 9% gains on Adani Ports and Adani Enterprises. Financials are very active on the Nifty. So you've got, of course, the Bank Nifty 2.5% up over there. There is Geo Finance, there is Shriram, Finance. A lot of these stocks, Bajaj Finserv, the NBFCs are really doing extremely well in today's action. So that's the picture for now. Mid cap index still holding on to a gain of 0.3%. So that's the story for now. Let's see if we can get Jyoti Gupta joining in, because much before the trade deal kind of took over our entire programming, today's big story was going to be all about defense post the budget announcement. So now, Jyoti, apologies, we took some time to come to you because it was just this absolutely historic morning. But yes, now that the trade deal news has been well digested, let's come back to the brass tacks on defense and the reaction we saw in defense stocks. First of all, what have you made of the rise in defense spends? I think the total spends are up 15%, but the amount that will be perhaps up for grabs for Indian defense manufacturers, I think that's a much smaller component of the total. So just tell us your first thoughts on this.
Good morning, Sylvia, and thank you so much for having me on the show. So see, when we spoke last time, I did mention that the increase would be around 15% and we would be close to 2% of the GDP. This is where we are. And I only expect very small ticket items like any R&D related, which is like 200 crores, anything which is less than 300 crores, and mostly into unmanned vehicles. That is why you see the investments also, which the government have announced, would be special attention towards Gliders India Limited, India Optel, Ammunitions India Limited, Troop Comforts. So these are basically contracts which would be given, which would be given out for unmanned aerial vehicles, any small R&D related products. But I think I would rather wait for some very large announcements to come in the subsequent months, and that is not definitely included in this budget section.
So, Jyoti, I mean, so what's the sense, and what would be the takeaways? I mean, what changes in terms of the allocation, in terms of just more bids this year? Where does the budget math leave this?
So I think I would rather, shift my concentration towards more of this, basic custom duty, which has been reduced. And we should look at what kind of components that we actually import across, various countries, especially US, France, and Russia. We buy complete aircraft to long airframe assemblies, turbojets and turbofan engines for both military and civil aviation for in terms of engine components, spare parts and modules for engine overhauls. In special alloys and raw materials, we have titanium alloys, high-grade aluminum, specialty steels and composites. Now, these are very critical for airframes and structures and engine parts. Then MRO, which is another very important section for civil aviation, which is where 90% of our Indian carriers, MRO work is done overseas by CFMD, GE, Pratt & Whitney, and then specialized test and inspection equipment. We have diagnostic tools, non-destructive inspection machines, calibration systems, other precision MRO equipments. For missile and missile parts, we are actually importing high-end avionics, sensors, guidance systems, and specialized electronic modules. So overall, I still feel that this was a good budget in terms of your. I think FY27 should actually see margin improvements in a lot of companies, especially which are into defense and non-defense. So if I look at a combo of companies like Tata Advanced Systems, Adani Aerospace, Aerospace and Defense, Bharat Forge, Sika Interplant Systems, Sanctum Electronics, Dynamatic, which have defense and non-defense portion both, they will be benefited. Their import cost should come down, and therefore there should be improvements in margin. In the defense companies, within the defense companies, I see Hindustan Aeronautics, because roughly around 69% of the overall revenue is contributed by MRO. Bharat Electronics, again, we import certain components and semiconductors for defense electronics. Bharat Dynamics, because we import subsystems, guidance systems, sensors, and to a large extent for Indian ordnance factories, which import specialized tooling materials. and technology for complex assemblies. So, these are the major beneficiaries from just the basic custom duties. And apart from that, a lot of small companies in the defense ecosystems, which are into sub components, parts, subsystems, they will be benefited where they're actually importing some critical parts for their systems.
Okay. Bharat Dynamics in particular had a sharp knock. I think it was more because of the quarterly results. But current investors, do they have any other reason to worry?
See, Bharat Dynamics, I think it's the quarterly numbers are usually volatile. You should look at this company on a long-term basis rather than looking at quarterly numbers. Third quarter would be a washout. I anticipated. We knew that the numbers may not come through because of certain, issues in terms of completion of the entire system part. But I think quarter four would be a very, very good quarter, should be a very good quarter for Bharat Dynamics because all that is the revenues which were not, realized would be realized in quarter four. So the guidance which I believe the company has given they should meet the guidance for FY26. And FY27, again, if you see once a QRSUM order comes, I think BDL, apart from BDL will also be a major beneficiary along with Lenti.
Okay, so Jyoti, then budget is done and dusted. That event is out of the way. So if someone and market sentiment has turned, right? Today, look at a very different market. I think so people will be in the mood to look at fresh allocations. So if someone wants to buy a fresh into the defense space, which are those stocks that you will go with and why?
So, frankly speaking, third quarter may be a mixed quarter. You may not see most of the companies may be disappointing in terms of the numbers. However, HAL could give you some bit of surprise. So I think the street has factored in a higher number compared to mine. So once the numbers come out, and I'm sure the stock will react negatively, and I think that's where you should see entry points. I don't know what's the best entry point, but I think any correction there you should buy because going forward, next 3-4 quarters are going to be very good quarters for the defense. Next 5 years are going to be very good for the defense industry overall. But I think next 3-4 quarters are
join कर दिया है प्रज्ञा.
Okay. All right, Jyoti, we'll leave it on that note. Thank you very much for being with us. Good conversation as always and very, very helpful for our viewers as well. With that, we are in the final leg of today's edition, today's show. And thank you, Jyoti. You have a great day. And we have Kunal Shah joining in. Thank you. Thank you. Oh, okay. I think we don't have Kunal with us. We'll try and see if we can connect with Kunal in the next couple of seconds. But it's turned out to be a good morning. There's no other way of saying it. We've got this 650 point up move on the index. Mid-cap index is holding on a bulk of those gains, 2.7%, 2.8%. Bank Nifty, 2.4%. So it's a really good morning of trade. And if I talk about some of the gainers, Wari Energies up about 10%. There's Aarti Industries, which is up about 11%. Vardhaman Textiles, Trident, lots of these stocks, Pearl Global, lots of these stocks, moving around with gains of 10, 12, 15, in some cases 20% as well. But now I think we do have Kunal with us. So as promised, let's quickly, get to the take on commodities. Kunal, thank you so much for joining in. We thought nothing can be a bigger headline than this 30% fall in silver and then a 5-7% rebound the way commodities are moving. But then we got the trade deal. That became the really big headline. But just to go back to commodities, what have you made of all this intense volatility? And I think people who joined on the commodity bandwagon, metals in particular, who joined in late, say in January, they would have been absolutely flabbergasted looking at the kind of very, very sharp losses. So first, do you get the sense that the shakeout is over? The volatility will subside or not?
So first, I think what we've seen is euphoria, the last stage of bull run where each and every day asset class tends to move up, and then something comes up which pops up the bubble. So the similar thing has happened into commodities. The fundamental of all of these commodities still remains bullish, but the quantum of jump, what we used to see during the month of January, December and January, that was definitely not justified. So in a matter of 2 months, we've seen gold prices moving up by almost $1,000. In a matter of 2 months, we've seen silver prices moving up by $45. So this kind of movement was definitely not justified, and we've seen finally the capitulation taking place. The exchanges have played a very big role in this. We've seen with the rising volatility, the margins have moved up substantially in silver. Like we've seen a peak margin of 69%. I mean, that has led to this kind of collapse in the prices, and also there was an excess. So now I think during this week the prices should stabilize, but I'm not expecting any sharp run up in the near term. So whoever has got into metals a little late, I think they will have to wait a much longer for profits to be made out of metals. And I think whoever has bought in January, they'll have to wait for another 3 to 4 months before their price comes.
Okay, on silver specifically, Abin, what are you looking at? We've seen this Friday was a 30% drop, then there was a bit of a recovery, and again this morning, prices recovered again. So silver, how should we see it? I mean, it's very hard to tell how much of the speculative element is out or not. But for those who are still in the market, should they, and if they're sitting on any gains, even after this massive fall, should they exit? And the reverse as well, those who were not participating at all, now that there has been this cleanup, is this a good entry point?
Okay, so I believe that silver has this nature, but 45% fall in a matter of 2 days is something very big, and people will not be able to digest this, because that's how silver functions, all the time. So I believe that even though the fundamental continue to remain bullish, I think prices may have a room to correct more. It can go down to $70 maximum on COMEX, maybe perhaps 65, and upside in a near term would be kept, because what we saw is a classical example of a scenario where the prices move up quite drastically, but the demand starts faltering. So across the globe, if you look at this physical market, spot market ex-China, everywhere the silver was sold at a discount of 4, 5, 6%. So the physical demand was not supporting the rally, and hence there was a cool off which took place. So I believe that whenever the prices goes to the levels of 2 lakh, 1,80,000, those are the levels perhaps you should start building your position. But in a near term, don't expect any big returns. All the rise in the near term, all the upside what we see, all the pullback we see are meant to be sold. So if you bought the silver, you are in the money. So I think if price goes up by 2,80,000, 3 lakh, I think you should try to book at least 50% of your profit.
Okay, and gold, Kunal, again same question. We were just having this conversation on asset allocation, and everybody agrees. I mean, that you need to have some gold in the portfolio, but it's just been so volatile. And people started to think of gold as they think of equity and stocks, right? That abhi equity nahi chal raha hai, so let's expect returns from gold. But, what is the right approach and what are the right levels, to add?
Yeah, so I think gold fundamentally is still bullish. Okay, there is no second thought on it. But I think it is likely to consolidate, and it is likely to even drift little lower when the silver goes down. But I think around 4,300, 4,200 shall be the good levels to again enter into long position, and expecting a big returns out of it. I'm not in that camp. I believe that now, after 2 years, we've seen an exorbitant return by gold. I think the return expectation should be tapered down. The allocation should not increase substantially, and we can see 15 to 20% return, that kind of moderate gains we can see in gold. But all those 40, 50% return time, I think that's over.
Okay, all right. Kunal, thanks very much. Very, very helpful. Any final take? I mean, any advice, say, on copper? Because all the metals were surging together. Then the crackdown and the cool off was almost, all in sync. So again, maybe on copper, aluminum, any other advice on what you should be in and what you should avoid?
I think in commodities vertical, there are a few commodities which we like fundamentally. One of them is copper. In metals, aluminum. Both these metals look pretty attractive going forward. What we saw lately was the overall sell-off in all commodities. So that has nothing to do with the fundamentals of copper. I still continue to believe that copper is likely to do well going forward. So on MCX, on Indian bourses, 1150, 1170, good levels to enter into long position for the upside target of 1350 to 1400 rupees. On LME, again, $14,000 to $14,500 during next 6 months is very much possible. And one more commodity which we feel is likely to do well going forward is crude oil. So even though we may not like it, it's not welcome, but the fundamental of crude oil is improving. The oil demand is expected to increase by 1 million barrels this year. And going forward, I think crude oil is going to do well.
Okay. All right. So keep an eye out on crude. That's the advice, and we will definitely do that. Kunal, thank you very much. Great to have you on the show today, and thanks for joining in. Very, very helpful to get some context in these very volatile markets. Thanks for joining in. All right, viewers, with that, it's a wrap on this edition of Opening Bell. Hopefully you found the conversation useful. We'll, of course, keep getting you more updates on the market.